All right. So, what is the futures market, right? The futures market is a market you can day trade in, similar to the way you go about Forex, okay? So, I'm a very simple person, so I'm going to keep this in as simple terms as possible. Okay, so in futures, you use contracts to buy or sell a certain asset or security instead of lot sizes like in Forex. All right, so you guys know in Forex, to enter a buy or a sell, we enter based off of lot sizes. Well, in futures, it's the same concept that applies, except you're going to be entering using contracts, okay? And when trading in the futures market, you are speculating on price based on technical and fundamental analysis, just like you do in the Forex market. All right, so once again, the same exact concept applies in the Forex and the futures market, except instead of putting in X amount of lot sizes in Forex enter a trade, you put in, right, X amount of contracts to enter a trade. All right, super simple. But that's the basics of what the futures market is. All right. So contracts. A contract represents the agreement to buy or sell a certain asset. This is what you will use to enter into trades, just like I kind of went over, right? Think of how lot sizes are used in Forex. We enter a trade using a certain lot size in Forex. In futures, the number of contracts you enter when trading a certain asset, like NASDAQ, determines how much you can potentially make or lose. And remember, there are always typically two contract sizes to pick from per asset. You'll have a micro and a mini. The mini is always bigger than the micro. So that's something that's different from coming from Forex, right? In Forex, there were so many different lot sizes to pick from. We had, right, a 0.01, 0.02, and so forth. Then we had the 0.1s, the 0.2s, right? And then we had the ones, the twos. Like there were just so many lot sizes to pick from. Well, contracts doesn't give you that many options. Typically, with almost all the assets, they only have two contract options. They have the micro and they have the mini, and we'll get into that in the next slide. But an example, since the micro NASDAQ, which is MNQ, you'll see it known as MNQ, is $2 per point for every one contract, right? So if I enter if the micro NAS is $2 per point for every one contract, and I enter 3 contracts with the 50-point stop loss and take profit, I am at risk of losing $300 or making $300. All right, again, the micro NASDAQ contract, which is MNQ, is $2 per point for every one contract. So if I only have one contract in, it's $2 per point, right? If I have 2 contract in, right, it's $4 per point, right? So I hope that makes sense, right? And then for the mini NASDAQ, it's NQ. See it known as NQ. That is $20 per point for every one contract. So if I enter 3 contracts with a mini for this asset and I have a stop loss and I have a 50-point stop loss and take profit, I'm at risk of losing 3,000 or making 3,000. Okay. Put a 2 in the chat if that made sense to you. All right, and I'm gonna go over contracts again. I just want to make sure that made sense. If it doesn't, go ahead and ask your question now. All right, cool. All right, so understanding contracts a little more. The value of an asset's contract size will vary depending on the asset, right? So that means that S&P 500 and NAS, they won't have the same contract size. All right, you can use cmegroup.com to check out different contract sizes for the asset or assets you plan to trade. All right, so I'll just show you really quick. cmegroup.com. All right, so you can kind of go to what you want to trade, right? So you'll go to markets, right? Let's say you want to trade, right, an indice. We'll go right to, where is it at? Down here. So you have the NASDAQ. So you have E-mini and micro. So if I click the micro, you could see it's MNQ, right? Go to specs and you'll see $2. That means it's $2 per contract. Okay. So you can do that for whatever you plan to trade. Just use cmegroup.com. Okay. Okay, where were we? All right. So an example for NAS, right? There are two different types you can trade, right? There's the E-mini and the micro E-mini NASDAQ. Okay. The E-mini is NQ, right? It's $20 per point for every one contract. Meaning if I got in the trade with one mini contract and my target was 50 points, that's $1,000. Will it be recorded? Yes, it's being recorded. All right. All right, so the micro E-mini, right, which is MNQ for NASDAQ, is $2 per point for every one contract. Okay, so that means if I got in the trade with one micro contract and my target was 50 points, that's $100. All right, and the simple math for that is, excuse me, 2 times 50 is 100, right? 20 times 50 is 1,000. Okay. Can we get the recording? No, the recording will be on YouTube. All right. So the recording will be on YouTube for everyone. All right. So that's how you'll be able to get the recording. All right. So remember, micros are always smaller than minis. Okay. All right. So in this case, one NQ, which is the E mini for NAS, is worth 10 MNQs. Okay. All right. So always remember that. All right. So some popular indices traded in the futures market, right? I'm an indices trader, so obviously I'm going to talk about indices. All right. So we have the Nasdaq, which we talked about, the micro MNQs $2 per point or per contract. The mini is $20 per contract. Now US 30 is known as Dow Jones. It's not, you won't see it called US 30 in the futures market. All right, so the micro, you'll see the symbol MYMM. It's 50 cents per contract. And the mini, which is YM, is $5 per contract. All right, then you have S&P 500. The micro is MESM, which is $5 per contract. The mini is ESM, which is $50 per contract. All right. And then one I like to trade, which is Nikkei, which is the Japanese stock index. It's called NKD to USD, and there's no micro or mini. There's only one, and it's 25 per contract. All right. So I hope this is helpful to some of you. I'm not sure what everybody trades. But again, if what you want to trade is not on here, you can visit cmegroup.com. And it will let you know what what asset you want to trade and what it's worth per contract. All right. So it's very important to know what asset you're going to trade and then what it is equal to for the contract. Because again, you guys can see all of these assets have different contract sizes. All right. All right, so rollovers and expirations. So a contract's expiration date is the last day you can trade that contract. And what that means is the last day you can trade on a certain chart. Okay, so this occurs on the third Friday of the expiration month, but varies by contract. So a rollover, the definition that you'll see on Google is the rollover is when a trader moves his position from the front month contract to another contract further in the future. Traders will determine when they need to move to the new contract by watching the volume of both the expiring contract and next month contract. So I didn't mean to double this, but in simple terms, right, you will just need to switch which contract you use to trade and mark up on. Like they did all this, it could sound confusing, but in the simplest terms, the months of March, June, September, and December, the third week of those, the third Friday of those months, you'll just need to switch the chart you use to trade on, right? So if we go right now, let's see, June is coming up. So I don't need to switch my chart this Friday, but next Friday I will. So right now you'll see I'm on Micro E Mini June 2024. So once that third week comes, I'll look for the chart that says or what's the next month? I'll look for the chart that says September 2024, which lets me know like okay, that's the expiration month. So typically they'll have the expiration month in the parentheses, for example. But all I'm doing is switching from this chart to the updated chart. I don't know why they do that. That's just how it works in the futures market. But the simplest way to not confuse yourself and to not overcomplicate it is you just switch the chart you trade and markup on. All right. Rollovers need to occur the third Friday of these months before 9:30 a.m. EST. All right, let's put some fives in the chat if this is all making sense to you. And if you have any questions, let me know now. All right, cool. No questions. And if you do have one, you could type it in the chat. All right, so trading in the futures market. So trading in a live account, when trading in a futures live account, I would recommend starting with no less than $1,000 to give yourself some breathing room depending on what you are trading. For me personally, this bias is based off of trading the micro Nasdaq. So it's $2 per point. I've tried to do a small account and it literally won't even let me enter the trade. Like futures will not let you over leverage. You have to have enough in your account. So like I said, $1,000 I feel like is a pretty good range. Even if especially if you're trading like the Dow Jones, it's 50 cents per point for the micro. But if you're trading S&P 500, you may want even more than $1,000 because the micro is $5 per point. Recommended brokers that connect to TradingView or Tradeovate and TradeStation. So I like Tradeovate a little better than TradeStation. TradeStation, I feel like the website's a little bit older, but they don't charge you to connect to TradingView, so that's pretty cool. Tradeovate charges $10 a month to connect to TradingView. But overall, I did like Tradeovate better, and I've tried both of them out, so that's why I can kind of give that bias. But TradeStation is really good as well. It's very simple, and like I said, if you don't want to pay that $10 a month, yeah, TradeStation doesn't make you. Oh, and then you can also deposit money straight from your bank account as well as withdraw your money straight from your bank account. So it's not like in Forex where you have to go through Bitcoin. Everything is directly from your bank account because this is regulated. Well, trading indices in the market is regulated. All right. So trading with a prop firm. Trading with a funded account is the cheapest way to trade futures. Each firm has slightly different rules and payout rules, so it's important to read up on each. All right, so personally, I've literally tried all of these. And okay, so I'm funded with Apex and Take Profit Trader. I haven't finished my funded futures one. I need to finish that one. And then I'm working on a few Top Step ones because Top Step has a free trade copier you can use if you use Top Step X. All right, so that's like super cool, right? So you can buy a few accounts with Top Step and literally trade them all at the same time, as long as you use the Top Step X platform, which is just like TradingView. So these are the prop firms. All of them I suggest like looking up, reading up on. If you're low on money and you just need something cheap to do and try out, and you have a solid strategy, right? You never want to go into a prop or a funded account or funded challenge without a solid strategy. But if you have a solid strategy and you're looking for the cheaper route for now because of, your funds, Apex is definitely the one to do because they're always the cheapest. All right. So I hope that was helpful and a little introduction to futures. I'm going to ask you guys one more time, just drop some sevens in the chat if you have no questions about the futures market. And if you do, go ahead and ask me now. I don't like to move fast. For those that may have already been on calls with me, like I like to make sure questions are getting answered. So that's why I have you guys drop those numbers for me. All right, perfect. We got them sevens in the chat. No questions. Can we trade futures in Africa? I believe so, but I am in the United States. So I honestly wouldn't know. I would ask Google. We can ask Google right now. But I am not in Africa, so I don't know anything about their rules and regulations. It looks like you can. Yeah. Can you go over some prop firm process? Not trade Mercy, did you get I've been out of Forex prop firms since last year in August. Somebody asked me. Um once because I had my Forex funds, once they went down, and that's where all my that's where I was funded with, I switched to futures. So I've been out of futures Forex prop firms for over 6 months now. Somebody said, can you go over some prop firm process? What do you mean exactly? You can type it in the chat. You don't have to ask it as a question. Somebody said not tradable in Africa, but possibly through prop firms. I think in Africa, trading NAS in the Forex market is regulated. So you technically don't, you can just I have students in my community, they just take the NAS signals in the Forex market, and some of them take them in the futures market. Sorry, which one are you using? My top ones, I have Apex and Take Profit Trader, and I'm working on a Top Step. And I do have a My Funded Futures. It's in the process. I just am more focused on my Top Step because I have a copier for that. So that one, my Funded Futures, just sitting there. But I have these two already, and I'm working on this one. Hope that helps. All right. And the process for all of them is pretty simple, right? You pick which one you want to do, right? They come with a set of rules. And like I said, you go to the websites and you read them all. Let me see. Is there a monthly fee? Every single one of them has a monthly fee. There's a monthly fee until you pass. Where did you get your copier from? Like it says here, free trade copier if you use Top Step X. So I didn't get it from anywhere, but Top Step X provides one. Yep, so if you go to let's see, Top Step. And interesting. Yeah, I wouldn't be talking about it if it didn't work. Yeah, I would not be like, yeah, it has a copier if it didn't work. No issues with payouts. I haven't got a payout from Top Step yet, though. Apex and Take Profit Trader, no issues. The copier works. The platform is smooth. Again, this is the platform. I wouldn't be talking about it if it did not work. You go here, go to copy trading, you pick a leader account, and you have all these accounts follow it. Where do I get your news? What do you mean my news? How would you compare futures prop with futures prop? Can you please repeat that? You said, how would you compare futures pop with futures prop? I believe you meant Forex Factory. For news. Okay, yeah. Okay, got you. Yeah, I'm sorry. You guys, some of the spelling's off, so I'm like, wait, what? But yeah, I use Forex Factory for news, if that's what you were asking. I literally, since I trade NAS, I literally just keep up with USD. I look for anytime USD has red or orange folders. Red is high impact, medium is low impact. But futures prop firms are great. I mean, they're reliable, right? In Forex, it was always a risk for us in the United States. indices were not regulated. So anything that let us trade indices, we knew we were at a risk. Right? So I love the futures market for being in the US because I know that I can trade indices and it's regulated. Now, if you're not in the US, trading indices in the forex market, it may be regulated for you. So that doesn't really apply to you. So you just got to know what applies for your country. But if you go to Top Step X, oh, it wants me to do this. Okay. Okay, I'm not gonna do all that. At any time, the forex prop firms could deny a payout for whatever reason. Yeah, I never had that issue, but they could have, and that goes for all brokers too. They could have denied it if they wanted to. All right. Let's see. I've definitely been looking into switching. Yeah, if you're in the US and you trade indices in the forex market, you're putting yourself at an unnecessary risk at this point. There's so many you should do you take students? Yes, and we will talk about that at the end. But yeah, I have a community where I have over 100 students, but then I also have a private 7-week mentorship where I take students up closely, so it's only a group of 5 to 7 people. And then I also have a day trading course, but that's more like pre-recorded, you do it at your own pace. All right. Let's keep it going and then we can talk about that a little bit more. All right. All right. So the beginner's introduction to bearish and bullish order blocks. Put a 4 in the chat if you've never traded order blocks and a 5 if you have. Is order blocks like supply and demand? I've heard it is a lot like supply and demand. I don't trade supply and demand, so I can't be like, yep, this is exactly like it. But I've seen people use supply and demand and it looks like very similar. Very similar, but I don't think they're the exact same thing. But then again, I don't trade them, right? So an order block is an area in the market that price is drawn into. Okay, we look for price to push into an order block area to potentially reject off of it to give us an entry in the market. Okay. The two main types of order blocks are bearish order block and bullish order block. And I have heard people say, to answer your question, people have told me it is similar to supply and demand already. I've had some students that switch from supply and demand to order blocks, but they said they're pretty much the same or similar. All right. So the bearish order block is the last up candle before bearish momentum. When you have these types of order blocks, you want to look for price to trade back into them for sells. You want to sell high and buy low. And remember, you draw the order block box around the bullish candle before the bearish momentum. All right. Once price trades back into the order block you were targeting, look at that. We would want to sell here. For new traders, it's ideal to wait for 2 to 3 bounces off the order block area before entering. In this case, price gave 3 rejections off the box before taking off. I would look to enter at the bottom of the order block, and stop loss is typically so above the wick attached, or you could just do the simple 50-point stop loss. So now I just do a 50-point stop loss. I don't have a different stop loss size every time I trade. I just do 50 points from wherever I entered. I try not to enter any more than 10 points away from the order block. So let's say like this and this is that 10 points from here to here. I don't want to enter any lower than here. Let's say that was 10 points, right? But initially, bearish order blocks are the last up candle before the down move. You wait, you look for price to trade back into it to get your sells. All right, and the same thing with the bullish order block. The bullish order block is the last bearish candle before bullish momentum. When you have these types of order blocks, you want to wait for price to trade back into it for buys. You want to buy low and sell high. All right. Look at that. Price then traded back into the order block area twice. Ideal entry again would be to wait for the second bounce if you're a conservative trader. So, something to note down. I am aggressive during opening bell. For opening bell, I will enter a trade if it bounces once off an order block. If it's anywhere like 30 minutes to an hour off after opening bell, I want to see at least one more rejection for extra confirmation. Okay. Again, my stop loss would be 50 points from my entry. All right. Are you doing? I only do market executions. I never do limit orders. You can't do limit orders in the way that I'm trading this because I want to wait for price to get to the order block. And as soon as I see it start rejecting, boom, that's when I want to enter. If it doesn't reject, then I'm waiting. Order blocks can be found on any time frame. Do you go off more momentum or do you just wait on I go off momentum, but I'm not only entering off of an order block. Order block isn't my only confluence. All right. So keep that in mind. I'm just teaching you guys about order blocks, but order block isn't my only confluence. I want at least 3 confluences, right? Can you go back to the last slide real quick? Yes, I can. There you go. All right. Let's put a 2 in the chat if that makes sense. And if you guys have any more questions, you can answer them now. What time frame? Any time frame. Order blocks can be found on any time frame. So if you are a swing trader, obviously you want to find order blocks on a higher time frame. If you're a intraday trader, then you may find order blocks on pretty much any time frame, but no lower than the 5-minute. If you're a scalper, you may only want to use the 1 to 5 minute. I'm not a scalper, I'm an intraday trader. I go no lower than the 15-minute time frame. All right, somebody had asked me. But yeah, so there's no time frame that I don't recommend for order blocks because everybody's a different type of trader. So if you're a scalper, you're only going to want to use the 1 to 5 minute order blocks. If you're an intraday trader, your frame is a little bigger. Do you trade live with your group? Yes, I do, Monday through Friday. As a scalper, the 1 minute is very noisy, but to each its own. Yeah, I don't trade the 1 minute, so I couldn't tell you about it, but I do know people that do. And right, it's all personal preference. There's really no right or wrong way to trade. My issue is entry. I don't know what time frame should I use. So as an intraday trader, I may use a 1 hour order block, right? Like let's say this is a 1 hour order block, but I scale down to the 15 or the 30 minute to get my entry. All right. Remember, this order block is just one piece of the puzzle to my strategy, right? This is just the way I enter, okay? So there are 2 ways to draw your order blocks. Technically, there's 3 because you could draw it from wick to wick. But there's body to body, right? And then there's body to wick. Now, the way you draw the order block, it all depends on the size of the candlestick body. There's no right or wrong way to draw the order block. It truly just depends on the size of the candlestick body, right? Because if you have a tiny body, you don't want to draw it so small that you actually end up missing the order block. All right. So like this order block, for example, here, oops, I would draw it from body to wick because the size of the candlestick body is so tiny. Okay. Then you back test the tact to know the market structure. Can you reword that? But I don't go based off of just order blocks to enter my trade. I have a set of confluences that I use. Order blocks is only one confluence. All right. So this is just one part of the strategy, right? So there's more that goes into it. But I just wanted to show you guys there's multiple ways to draw the order block, right? It really just depends, right? Like this one, I would draw this last up candle before the down move from body to body. All right. And the reason being is because it's a full size candlestick body, right? But then something like, let's find another one. Let's see. I'm sorry, guys, my throat's getting a little itchy. All right, something like this. I draw this from wick to wick. Look how small the size of the candlestick body is. If I drew it just from the body, it'd be this tiny. All right, so I'm just showing you guys it depends on the size of the candlestick body. See, with supply and demand, we would draw it from wick to wick as the wick can be liquidity grab. Now, you see, I only draw it from wick to wick if the size of the candlestick body is small. All right. Great question. All right, let's keep it going. All right. So remember, when it comes to bullish order blocks, we're waiting for price to come back down into them for buy entries. This typically means the market is trending up and we want to buy low to ride with the trend, right? You don't want to buy randomly up here because you're going to be in a necessary down. Wait for price to trade back into your desired area. This is the last down candle before this bullish momentum. Wait for price to trade into it for those buy entries. All right. So there are order blocks all over the chart. So when marking up your bullish order block, make sure it has valid momentum, bullish momentum, okay? Or else you may find yourself marking up every little bearish candle before a bullish order block. All right. So that's very important, okay? So like you don't want to just mark up any random candle, right? First of all, your bullish momentum should be bigger than the last bearish candle. So notice how this is the last bearish candle and this bullish momentum is bigger than it. If they're like the same size or the bullish order block is smaller, or the bullish candle is smaller, that's not an order block. All right. So waiting for at least 2 bounces off of the bullish order block is a conservative entry, which can also be used as extra confirmation. Remember, once I get my entry around the bullish order block, I want to put my stop loss 50 points from wherever I entered. It helps me to not have to think about my stop loss size every single trade. I literally use a 50-point stop loss for every trade, and getting rid of that question I have to ask myself in the market every day has helped significantly. All right. So remember, just because the body of the candle is small doesn't mean that the order block is not valid. Here the order block is drawn from body to wick. It's the last down candle before this bullish momentum. Okay? Do you wait on the candle close? Nope. If you wait on the candle close, you will 100% miss the trade. 100% miss the trade. Look at all like you will miss the trade. You are looking for a wick rejection off the order block. But if you wait for candle closes, you're going to miss the order block trade. Like let's say now this candle closes a little different because it closed here. So if you're trying to be a conservative trader, you may wait for you may want a rejection and a candle close above the order block, and then you're waiting for that second rejection. But if you waited for the candle close on this one, you would miss the whole trade, right? But I'm an aggressive trader, so I do that wick rejection. Well, that not depends on your account size for the 50%. Nope. It does not matter what account size I have. I am using a 50-point stop loss. I base how many contracts I'm using and adjust it towards that 50-point stop loss. So again, it does not matter what account size you're using. I am using a 50-point stop loss. Okay. Yep, no problem. Are you trading directly? I do not trade from Tradeovate at all. I either trade from TradingView or Top Step X. I trade from TradingView for a live account, for Apex, and for Take Profit Trader. I trade on Top Step X for Top Step. But I do not use the actual Tradeovate website. I connect it to TradingView, which I mentioned earlier that you can use that. Okay. And then look at that. Price rejected once and took off. So this is why I'm aggressive during opening. This happened during opening bell, this is why I'm aggressive during that time. All right. If you wait for a close, you wouldn't have caught this trade. Right? So as soon as price comes here, starts rejecting your order block, boom, you want to enter your trade. All right? And you also want to make sure to have other confluences as well. All right? So just to give you guys a little hint, there were buyers being stopped multiple times right here. Right? An area where buyers are being stopped multiple times, not wicking above, but it struggled to close above this area, lets me know that liquidity resides above, which lets me know that price is drawn into liquidity. Once price closes above buy stop liquidity, that liquidity has been taken. All right, I'm not going to go into that. So you don't use IBKR. I have no idea what IBKR is. I have no idea what that is. I can tell you right now, I just know if I have a 50K account and I only want to risk 50 points, that is 3 contracts, right? 3 contracts is how much I risk on a 50K account. How you set a stop loss on TradingView using market order. It does not. It does not only work like that. What would be your take profit? Every day is different. I set my take profit points based on key areas. All right. Again, this is all in my community. This is all in my course, but we can't go over every single thing my strategy makes up of in 1 hour call, right? But I will show you how you can, I'll just do a paper trade, connect to the paper trading account really quick. You click buy, 50 ticks. 200 ticks is 50 points. Let's say I only want to risk $400, right? On let me fix this. Oops. Oh, what am I on? I'm on something completely wrong. I was like, why is it doing that? All right. So let's say I want to use 3 contracts in my trade, right? This is the wrong one too. So let's say I have a 50K account. I want to use 3 contracts with a 50-point stop loss. That is risking $300. That is risking 0.6% of the account. All right. I'm sorry. There we go. Does that make sense? 200 ticks is 50 points for Nas. Okay. That's all you need to know for your stop loss. Once I enter the trade for my take profit, I'll adjust it. So let me show you pretty much what that will look like. So let's say I get in this trade here. We're going to use this as an example. All right. Let's say this is the last down candle before the up move, right? What time frame is this? This is the 4-hour. All right. So we got the 4-hour candle, right? So I'm just going to stick to one time frame just to make it easier on you guys. Because if I try to do multiple, it just gets confusing. All right. So boom, let's say I entered the trade because it rejected twice off the area. You know what? I am going to use a lower time frame. Just kidding. So I can do this properly. All right, there we go. Was this the other day? No, it wasn't. All right, here we go. All right, so let's say I'm waiting for price to possibly trade back into this area. All right, so I got my order block here. I'm like, okay, well, buyers are being stopped multiple times here. That's buy stop liquidity. That lets me know that liquidity resides above price. All right. I also have imbalance, which is a strong impulsive move to the upside or the downside of the market. In order for bearish imbalance to be filled, a bullish market has to fill it. I also see prices struggling to swing lower, letting me know price may want to buy. All right. So let's say I'm getting ready, for my entry, right? I may be getting ready for my entry here, my 50-point stop loss. I haven't entered the trade yet. Let's say I'm about to enter. Let's say my overall target is just going to be this next order block attached there. So if I were to do take profit points, right, I'd look for key areas in the market. I always like my TP1 to be at least like 20 to 30 points from entry, right? So look at this. I'm literally just doing key areas in the market I see prices liked in the past. All right. Key areas in the market, some areas price may have wicked at, or past order blocks, okay? All right, so let's say, hold on, let's go back. All right, boom. So let's say I didn't enter the trade just yet here because it only rejected once. It also goes based off time of day. So this time of day makes more sense for me. So boom, once price pushed here, right? Pushed down here, it started rejecting. I would get an entry somewhere around this area because it's rejecting the order block. All right, I'm trying to make that make sense to you guys. So let's say I got in here. I got in a little above the order block as soon as it pushed down here, started pushing up. As soon as I see it starting rejecting this area, boom, I got in the trade. All right, so TP, I would have now had this as the TP1, obviously, because that's just too close. That other one was too close. So let's say this is TP1. So automatically TP1 and 2 were hit. Let's say I entered with 4 contracts, which is risking $400. All right. Once TP1 hit, cool, that's 34 points. I'm still in the trade. TP2 hit, that's 65 points. I'm now moving my stop loss. We'll do my stop loss as purple to break even. And give me a moment and you'll see that I trail my stop loss. All right. So my stop loss is at break even and I'm taking 1 contract off my trade here. All right. So I took 1 contract off at 64 points, 68 points. So 2 times 68 is 136. So I just secured $136, right? Let's say that. All right. And now I have 3 contracts remaining. All right. Stop loss is a little above break even. All right. Let's keep it going. It didn't, thank goodness it did not hit my stop loss at break even. All right. But it now hit my TP3, right? So I'm moving my stop loss to TP1, and I'm honestly going to take some more partials, right? So now I'm taking more partials at 164 points. So 164 times 2 is 324. So, or 328. So I'm securing 1 contract, 328. All right. So now I have 2 contracts remaining in the trade and my stop loss is at TP1. And look at that. The rest of the targets were hit. So my 2 contracts so that's 235 times 4 is 940 plus 328 plus 136. All right. Does everybody understand how that's how I go about my trades? I cannot show you how to take a contract off unless we're on real time. But I actually think I have a YouTube. I believe I actually have a YouTube video for it because I'd have to be in a trade to show you how to take contracts off, right? Obviously. So let me just show you real quick. So I'll explain it first. So if you're in a buy, and you want to take, let's say I was in those 4 contracts, right? I'm in a buy and I want to take 1 contract off. The way I'm going to do that is sell 1 contract. That's how you take partials. I know I have a 2, where is it at? The journal, here it is.
Forex.com, the #1 Forex broker in the US.
All right, so to take partials off futures, it's super, super easy. You literally, if I'm in a sell and I want to take a partial off, I literally just click the buy and I just take 1 unit off, and now I'm in a sell of 4. And then I just want to fix this here to go 4. And then I'm going to actually move my take profit down because I want to go for the overall one and just kind of keep track. And I'm also going to move my stop loss to break even. All right, so I just took partials and I moved my stop loss to break even. All right, so that was a live trade that I did with my community, and I just kind of cropped it. So if you're in a sell and you want to take partials, let's say you want to take 1 contract off, you're going to buy 1 contract. If you're in a buy and you want to take a partial off, you want to sell 1 contract. All right, let's put a 5 in the chat if that makes sense. All right, I hope this is helpful to you guys. I know we only had we have an hour, and I try to cram as much in as possible so you guys can get a good idea of how I trade. You guys now have a good idea of how I trail every day. Tradeovate is asking me for utility bills to complete my application, but I do not have one. Utility bills. I don't remember that. Are you? Yeah, I don't remember that. Are you doing it as a professional or non-professional trader? You should be doing it as non-professional. All right, Tradeovate doesn't work in Nigeria. All right, then maybe use TradeStation. Yeah, I'm not sure about that. But all right, let's get into really quick before we end. I want to get into, this is my trading community, right? I want to get into showing you guys. So the trading community actually has an app that you guys can use. Let me show you really quickly. Let me turn my camera on. So this is the app. It's literally, let me see. So see the app and my screen, they're literally like the same thing. So you can use the community on the app, or you can use it on the your desktop, okay? We have a timeline. I'll post like news events, or I'll ask everybody how they're doing, you know, and so forth. We have a chat where people post their charts. We chat with each other and all that good stuff. We have the results section where people post their results. As you can see, somebody just learned the OB strategy and is now making money. You could see just students are posting their results. I post my results. Does the same applies to Canadian customer? I am in the US, so I do not know anything about any other but I do have students that are in Africa, and I do have students that are in Canada as well. So they kind of help each other out in that aspect. But for brokers, you can look on the website to see what they accept. But there is a broker out there for everybody. I just know by country it kind of varies. All right. We also have a prop firm success area. So as you can see, two days ago, one of the members just passed their 50K challenge. Somebody just passed their 250K, another 150K. So yeah, so This is where people post their prop firm success. This is something new. We're starting to track trades and emotions, right? This is to hold you accountable of tracking your trades, okay? So I'll post mine as well. You can see my emotions journal and everything to see how I do it. We have the events tab. All right. So like I have a call in 30 minutes with my community. All right. So you can see all the events coming up for the next month. Some people RSVP. Honestly, most people don't because we have a lot of people on the call. So they just kind of click it when they know it's time. We have recorded content. So if you miss a call, educational call or a live call, you can always catch the recording. So we have some Forex basics. If you want to do more in depth on futures, I have a bunch of future basics calls. We have psychology calls. This was our New Year's boot camp. This will break down the strategy for you in a 6-part boot camp. But then we have a bunch of educational calls. These are all live calls that were recorded. All the live sessions are recorded as well. And then we have weekly overviews that are recorded as well. Every call has a PDF file attached to it. So if you don't have time to review the call, you can read the PDF. The chart analysis is just literally where people post their charts. As you can see, I even post mine as well sometimes, but a lot of the students, this is where they post their charts. We have that for indices, currencies, gold, and cryptos. We have a book discussions area, which hasn't been as active lately, but if we're reading a book, people will post their takeaways and I'll post my pages as well. And then if you are a believer, right? So for my believers, we have a area where I will post like my Bible verses, and maybe a song I'm listening to and all that good stuff like that. All right, so that is my trading community, all right? It is $79.99 a month, all right? Now, I have my trading course. This course here is pretty much pre-recorded. It is pre-recorded calls. So this is for Forex and future traders, right? It is all pre-recorded, right? So it has the video, the PDF from the video, in a quiz, all right? So yeah. And then it's 7 weeks. All right, it's split into 7 weeks, so it may take you longer. I suggest watching the videos multiple times, but it's 7 weeks and it goes like step by step into everything. All right. So everybody that is on this call, I'm actually going to stop recording now because everybody on the call is actually going to get access to some special codes. So I'm going to go ahead and stop recording.